Hi, and welcome back to the show. My name is Joe Rabil. I'm with Rabil Stock Research. So I'm going to get into the stock requests that came through. A lot of movement in the market, definitely some interesting patterns developing. I do want to start out with a lesson. And most of the time when I talk about multiple time frames, I'm looking at a higher time frame that's already trending. Okay, and I'm looking for entry on the lower time frame. So that's typically how I'll use two time frames together. At least that's how I've shown you in the past. What I want to show you today is there are four different kind of unique patterns that can develop with the help of MACD that can give us a little bit of an edge to know when and trending, what looks like a trend might be reversing, and we can start to anticipate. You still got to use two time frames in this situation though. So let's go ahead and get into the agenda. So there's four signals that I would say that I use. There's probably one or two more, or what I should say is variations on a theme. So each one of these could have could play out in a couple different ways. But the key thing about what I'm going to show you is the higher time frame is still considered to be in a trend, but these patterns or these signals develop and give us an idea that maybe the trend is getting ready to reverse. Now we always need the lower time frame to confirm. I'm going to show you on that as well. And then after we do that, we're going to get through the stock requests that came through. So in this lesson, I'm going to do Adobe, and then I'm going to look at PayPal. And I guess I should clarify when I'm looking for a reversal. So, I mean, if we're looking at something like Adobe, it has reversed off the bottom. There was a tradable play that could have been taken off the weekly and the daily chart recently, and there certainly was one off the peak here. So it doesn't necessarily mean that we got a full-fledged change in trend that's going to, continue to go up for the next year or two. What I'm pointing out is typically I'm looking for two time frames, and the higher time frame is already trending. But there are times when you can take a trade when the higher time frame is trending in one direction, and we're looking for some kind of a early kind of reversal pattern that can be profitable. So we're going to start out with this Adobe. Again, the classic pattern, and nothing new for anybody who's watching this, is divergence, right? I mean, we've got a lower low developing here while MACD is making a higher low. All right. Now, one of the things I want to point out is I have talked about undercut and rallies in the past, and I've also talked about failed new highs and failed new lows. To me, this qualifies as a failed new low. And the reason is that we undercut this low here, but we were in a downtrend. The overwhelming trend was to the downside. All right. Now, if you look at that pattern and then you compare it with this, so this is, to me, is an undercut and rally pattern because the overwhelming trend was positive still, and we undercut this low and then turned up. Okay, so this is an undercut and rally. This is a failed new low. They're two different patterns, and this has a number of different rules associated with it. But the main thing is it's happening in the direction of the trend. This one, the trend is bearish, and we're getting signs of a new low where there's no follow through to the downside. So we want to look for that with momentum divergence. A lot of times you'll get really nice reversals. I've alluded to this over the last few weeks, and I think that's a really good pattern to be on the lookout for. Now, if we go to the high, I want to point this out as well. So this is also a failed new high because the trend was up and now we're reversing. So it's not like it's not the opposite of an undercut and rally, right? It's actually more of a trending pattern that actually failed new highs. So if we go back and look at this, we can look at every time this broke out, it had follow through, broke out, follow through, broke out, follow through. And then we get to here, we break out and there's no follow through. So this to me is, again, what I'd call a failed new high. O'Neill refers to it like a late stage breakout that is prone to failure. I just typically look at a pattern that's trending and it can't follow through in a breakout as being a failed new high. Now, when that also has momentum and divergence in place, that can be very, very helpful. So we want to go down to the smaller time frame, and I'm just going to show you. So this is the smaller time frame here on the daily chart. And what I would do in this situation, because of the way this is played out, I've got my trend line on the daily. We break the trend line, we come back and test. So this would be the 2, and then 3 is coming back through this line here. So right around 650 on this chart would be somewhere around in here. We're getting confirmation on the smaller time frame that the trend is reversing, and we already know we have divergence on this time frame. This is the only way that I want to take this trade. I don't want to just do a divergent trade by itself. I'm looking for confirmation on the smaller time frame. So that's how I would go about doing that. Now, I want to show you another signal, and I'm going to use the daily for this. So let's assume the daily is the higher time frame in this situation, and we've got a stock that's been going up and up and up, and the trend is still up here. And then notice what happens. We get a trend line break, but more important to me is we actually get this to come down and test the 40 for the first time. You see how we make this monster move to the upside, and we actually come all the way down to the 40 and then bounce up towards the 18, which is rolling over. This is kind of important to me. I want to see this line losing strength and kind of rolling, because if that's the case, in most cases, we'll have confirmation on a momentum basis. This happens to be a pinch play as this is rallying back up. So we want to be on the lookout for a move back to the 40 and then a rally back to the 18 that's rolling. And when that happens, the trend is still up, right? The 18 and the 40 are 18's above the 40. They're both basically still rising, but we can play this for a downside move. We'd have to go down to an hourly chart to get confirmation, but we'd use the same strategy looking for either a 1, 2, 3 or some signal that the trend is turning down on that time frame. So that's 2. We've got momentum divergence on a failed new high or a failed new low. I like that pattern a lot. It's something to be on the lookout for. The second one is the 40 to 18 bounce essentially, but we want to make sure that that 18 is rolling. And in the process of doing that, we also want to make sure that the MACD is failing as well. So if MACD is showing a lot of strength on this rally back up, we might not have as much interest. The other thing that I find to be very valuable is to look for this to coincide with a break of the trend line. Let's go ahead and look at PayPal, because there are 2 patterns that have developed here that I think is worth noting. So first of all, we have this same divergent pattern that we just talked about. And if you notice, I haven't talked about ADX at this point. So we want to use ADX, and if ADX is showing weakness on a momentum basis and confirming that, that is a helpful. I would not consider this weakness, because even though this is divergent, see how this makes new lows and this is not making a new high based on the selling pressure, this is still above 50. I mean, I don't think that's really what I would consider to be divergence. But if we go to the daily chart, so if I have divergence on one time frame, what I like to see is the momentum on the lower time frame. So if I'm going to get in, I need to have either a reversal or show momentum loss on this time frame, or a momentum divergence on this time frame. We had some signs of that in MACD here, but where it's important is when ADX shows divergence and then crosses down below 25. So a divergent ADX peak drops under 25, clearly drops under 25, you want to start to be on the lookout for a move, a reversal of the pattern. So this can really help with your timing. See, we know we have this divergence in place and it started back here, but if we waited for the ADX to really kind of die down on the sellers, then we get a sign that things are really reversing here and we get this move to the upside. If you want to wait for a little bit more confirmation and a test of the 18 and this pinch play here, there's nothing wrong with that. There's still going to be plenty of room to make money in this type of trade. So it's all about how you want to do it. If you like to be early, look for this ADX pattern where it's a divergent peak that drops down under 25. Okay, so the last one I want to show you is a really fairly unique pattern. That's where you get this violent move to the downside. Now, keep in mind, these moving averages are still rising. And they're still rising throughout this entire signal. You get this harsh move to the downside, you get a little consolidation, you rally up, and you're kind of walking along the 18. You see how price is kind of just walking along, and you can almost see that 4 and the 18 are parallel. But what's important to me is that I've got a harsh move to the downside, and now I'm getting almost like a bear flag pattern. Move down, and then you have like a little flag forming to the upside. Now, what's key about this and what I'm looking for is I want MACD lines going the opposite direction. Both lines have to be falling in this situation. This is like this rally, it's like trying to rally with an anvil tied to its foot. The momentum is going the opposite direction, and it's trying to rally up into this resistance from this harsh decline bar. Now, sometimes you won't get this one bar down, but you should have like kind of a strong move down and then a kind of a little bear flaggish type of a pattern, and these are going in the opposite direction. So really something to be on the lookout for. And then again, we want to go to the smaller time frame and look for a reversal on that time frame to get you in. In this case, it would have been another 1, 2, 3 signal. Where we go up and break the trend line, we come back and test, and then here you get more confirmation right in this area. So just keep in mind, when we have this type of pattern, our target's going to be something like this. So there's going to be plenty of room to play in some of these, is looking for these targets down near the next support level. And so you can wait for a little bit more confirmation on the lower time frame. You don't have to feel like you got to be the first guy there. Just so you know, if you wanted to use MACD in this situation, you had a zero line reversal and then a really nice pinch play entry right around 275, that would have gotten you in right before this next leg to the downside. So anyway, this probably went a little longer than I wanted, but I think these are pretty critical patterns to be on the lookout for, especially in the environment we're in right now. Let's go ahead and get into the analysis now. For those of you that are interested, my services can be found at rabilstockresearch.com. I send out about 2 to 3 reports each week, plus a special video for the individual package. If you have an interest in trying it out, you can use a coupon code StockTalk and get the first 2 months for $50. Let's go ahead and get into the stock request now. In this week's request, I got a lot of questions about energy. I had the USO, I had the XLE, I had some individual stocks, and then I also got separate questions from subscribers asking about what was taking place in the energy area. So I thought it was worthwhile. What I did was I've put all those symbols together, and I want to go through those. First, I'm going to take a quick look at the S&P, and then when I get through energy, I'll go through the rest of the symbols that came through. I should be able to get through the key symbols that were requested this week. Okay, we look at the S&P. I think one of the things that I think is important right now and that we have to recognize is, first of all, it's running into the 18-month line, right? I mean, this line is still rising, so it doesn't carry as much weight from a resistance standpoint as if it were turned down like that. I mean, if it were looking like that, then I'd be a lot more worried about this rally. Even if it were flat like that, I think I'd be a lot more concerned about what's taking place. But it's still an issue because we're coming up to a line after hitting the 40. We're basically retracing about 50% of the decline, and bigger than that is we have the MACD lines going in the opposite direction. So I know this is sort of fighting momentum as it rallies right now. And when this is in this position, I typically am looking, if this is an individual stock, I'd be looking for some kind of a move, come back, and then see if it can get through, or maybe fails and turns down that way. So I have a feeling that's how this wants to play out, is to consolidate, maybe pushing a little bit higher. The key thing I want to talk about today is the ADX on the daily. This is too strong right now to expect a big drop instantly. I know we're hitting a really key level. We're hitting the 200-day or the 40-week. We've got some resistance up here, 4,300, 4,400. We should be on the lookout for it, but as long as this ADX is rising like this and DI is confirming every new high, I don't think we can expect a big drop really quickly. So key on this ADX on the daily chart, and I think that'll be kind of helpful to you. It should start with maybe a little bit of a drop, and then we get a test or a minor new high where this starts to drop off. The other thing I would tell you is the red DI is only at 14. The sellers are really weak when they're below 15. That's just a good reference point to have. Okay, let's get into the energy stocks. But first, we'll start with the USO, which is a pretty good proxy for the crude futures. So we've got a downtrend on the daily chart. Right? I mean, this is making lower highs and lower lows, but we can pretty clearly see that 70 is a really important level right underneath here. So I think the way this is looking to me, if I go and look at this, I've got a pretty decent up move on the monthly chart confirmed by ADX that's pulling back towards the rising 18-month line. And this was also a big undercut here. And then on the pullback on the weekly, we broke the 18-week line and that has rolled over. All right. So this to me is consolidating back towards this rising 18-month line. I think this is a very bullish long-term pattern. This has the makings of something that can consolidate and then go again, based on the fact that the MACD is pulling back to the zero line. There's no real strength in the sellers here. So I'm encouraged by both of those. I'm encouraged by what I see on the positive side on the ADX here, and the fact that the MACD is getting back above, in a pretty clear fashion, back above the zero line. What's missing now, I think, is some strength on this time frame. The daily has red DI above green. There's no sign of buying strength right now. And I personally think it would be healthier if this spent more time consolidating and working its way closer, so these lines come a little bit closer and the MACD gets a little bit closer to zero. But I would say that overall, on balance, I'm kind of constructive about this. I just think you have to be patient in the short term. I don't think it's really quite ready to just take off and go. If we look at the XLE, I see somewhat of a different picture, and this is encouraging to me, where the futures is actually a little bit weaker than the average stock. If we look at the sector fund, this is definitely stronger than the USO. And the other thing that I would tell you is, what I think is real important is we had this breakout to the upside. Look at this move on the monthly. Look at the ADX confirmation here. I mean, ADX got up to like 35. It's still rising, actually. And we've had a harsh pullback. It's a big red bar reversal up here, but we're holding the breakout zone here. So we break out of this big base, and then we get a pullback, and we got good momentum in place. What this big reversal bar tells me is that we're probably not going straight up. I think we go up and come back down, consolidate in here before we're ready to go. Now, I think this plays out one of two ways on the weekly chart. I think we can either do it, we could either push up like it's doing right now and have this kind of cup around, and then we get an entry on a pullback like that. Or it might be, it's trying to push through right now, but maybe it comes back down and forms a better bottom, and maybe this comes down a little bit more, and then coming back up through this peak, it actually looks a lot more important, because right now it just looks like it's rallying into resistance. I'd like to see some form of a higher bottom form. We don't have that. We have kind of a move off the low. Now, when I start looking at the individual stocks, the important thing to watch is this breakout area, and look for the stocks that are pulling back and holding. So the one of the requests I had was this PXD. This is one of my favorites in the energy area, because look at this massive breakout of a huge base pulling back to and holding this 200 zone. So I've got a really strong positive bias based on the monthly ADX, based on the MACD and everything. Now, the question is it all about entry? And as I said on the XLE, so this could turn up and then pull back and let this cup around, or it could fail here, turn back up and make kind of a double bottom and then turn up. Either one of those, I think, would be constructive patterns that I want to buy based on what I'm seeing here. I just don't know that I want to take the first cross of the moving averages. I know this is a zero line reversal with low ADX, but we don't have a trend line drawn or anything. So when that happens, I tend to want to let it break out and then buy the first pullback, especially when we've had some harsh selling. PBT is a little different. I mean, this is so extended on the monthly chart. You have to really play this off the weekly and the daily. Now, you could have done this off of this higher low. We made a strong move through. This is one entry coming up here, but it was kind of late because it was up 5 days in a row. But instead of pulling back and really giving us an ideal entry on a pullback to the 18-day early, it waited and went all the way up. And your first real entry was here. So, I mean, you could have done that here on this trade at that level, and you could be sitting here kind of waiting. I think it's just tough because we have this big reversal bar on the monthly. We had this kind of a spike high here, and we know just looking at everything else, it doesn't look like energy is just going to skyrocket from here. But if you want to play this, I would probably make sure it holds these two lows. If it breaks that, you take a small loss and then look for a re-entry down the road. Another one that I think is really tough, this was another request, and this is in a very powerful trend. We have a rising ADX at 34 on the monthly, and we have a ADX that held 25 during the correction phase. What I'll tell you about it is it's very volatile, and we don't really have what I would consider to be a quality entry pattern. The way I would probably handle this is go ahead and get long and then use this low right now as your stop. This last legitimate bottom on the daily chart, somewhere around 21 or something like that. If we break that, then this is going to be on hold for a while. If we hold that, there's a very good chance that this is going to take off. But you just have to adjust your size to make sure that you're making up for the differences here. I mean, it's still pretty far. It's 4 or 5 points away. But I think this is the key low right now. The closer you can buy to this line, the lower your risk would be. If we had a better setup in place on ADX, or it was a breakout and a pullback play, we just don't really have that here. It was kind of awkward, but there's no question there's a lot of power here. All right, let's move on to some other areas. So FPI broke out on the monthly, pulled back, rallied up, and then look at this really quiet monthly consolidation pattern you can see on the weekly. I think this looks really good. The momentum signs are really good. I think if this can come back up through 15, especially with some strength in it, that would be a pretty good sign here. The reason why I'd wait is the MACD is still trying to climb back above its signal line on the weekly. We don't really have a signal there, and we have a low ADX pattern on the daily chart. So I prefer to buy a breakout when that happens. ALIT has got some resistance coming up around 910, something like that. I mean, we've got a declining 40 here. If we can get some kind of a pullback towards the 18 as it cups around, I think I'd have more interest in that. From a short-term standpoint, I guess you could try and play this, but there's so much resistance up here. I think that would be a tough play. CLS looks good from a price standpoint. Monthly pulls back to the rising 18-month with a rising 40 underneath, and we actually have a pinch play here. And then you got an opposing trend pattern with the 18 above below the 40. A little bit of overrun means we want to buy a little pullback towards the 18-week. My only real problem with this one is we don't have strength on the green DI or the ADX on this move up. So I'd be inclined to believe if I can get a good entry here, I'm willing to play this more as a probe trade, because I'm a little worried about what's going to happen as this gets up towards 13, something like that. So you can play it, but we got to see some strength coming up through 12.5, 13, or you probably want to be a little bit more aggressive in taking profits. So SBUX has rallied up a lot. The momentum, just like on the S&P, the momentum signs are still good. What I would be doing with this, the person who's in this, now I think they're in options. So because we've rallied up so much, we're coming up towards this resistance zone. This is probably not a bad spot to get out of the options. If you were long the stock, though, I would keep playing this until we get divergence in green DI. Green DI keeps making new highs with price, and we have a strong ADX here. What we're looking for is the first time this goes up and this actually makes a lower high. Once that happens, really use a tight stop and follow it really closely, and if it breaks below that, then that would be the exit for this leg. And the main reason I don't want to stick around too much longer in this is because this is getting stretched and we're starting to get up into resistance on this time frame. So UFPI, overall, pretty good pattern. We had a strong move on the monthly. We have a pretty good look to the weekly chart with green DI taking over again. What I don't like is this big red bar here, and the fact that that caused the MACD to roll down. Now, what usually happens when I see this is that I'm looking for this to come up, kind of fail at the 50% retracement, which is what this did, and then come back down and then turn back up. And if it can pull that off, I'd be more interested in taking out these highs. So a little bit more of a dip here and then turn back up. Now, if the dip causes this 18 to roll, if this starts to roll over, then I'm not as interested in this trade right now. I want this to spend more time consolidating in the near term. As long as this is still rising, I'm willing to do this on a break above these levels up here. I think this was actually a decent enough little minor pullback that, you know, if this just goes sideways for a day or two and then tries to break out, you could try and play that. I think this big red bar is the pivotal bar. Breakout above, you could actually use that as a trading stop for a swing trade or something like that. Tesla is the last one I'm going to do very briefly. We're rallying up into resistance and we're getting up to about the 62% retracement of the move. Look for a pullback in this. If it does it the right way, this could look pretty good. But if the selling is harsh, I think this could form a trading range. Thanks for watching the show. My research can be found at rabelstockresearch.com. And if you have any stock requests, send them to stocktalk at stockcharts.com. Have a great week and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.